Welcome to our tutorial on how to create multi-asset strategies with Qcaid. In previous videos, we have seen different ways to create rules on the market data of an instrument. In this video, you will learn how to use information and trade on multiple assets in a single strategy. With Qcaid, we can create strategies that make use of as many instruments as we want. As an example, we will build a strategy that goes long on an instrument and then short on a second one once the first position is acquired. To perform the market orders, we will use limit order elements in signal mode, so that we can dynamically update the quantities to trade on each instrument. It's important to remember to select the correct instrument in the relevant elements. We will keep a buy order alive on the first instrument as long as two conditions are met. Firstly, that the position we hold is lesser than the total quantity we want. We set the total quantity to acquire as a variable, so that we can choose its value when we upload the strategy. The second condition will be that the current price of the spread, this is to say, the difference between the ask price of the first instrument and the bid price of the second, is lower than a certain limit. We will set this limit when uploading the strategy too, in this instance with a decimal variable. We merge both conditions with the AND element. We can use the bid price directly as the limit price for the buy order. If the bid price rises, signal mode will modify the order to stay in the best bid price. The bid price cannot descend, because even if all other orders in that level price are filled or cancelled, our order will set the best bid price. The size of the order will be equal to the target position minus the quantity already acquired. The second instrument will hedge order fills on the first. To that end, we will keep its order active as long as the position on the first instrument is greater than on the second. Remember to correctly set the instrument in the elements that need it. The quantity to sell will be the difference between each instrument's positions. To set the sell price, we will use the condition on the spread price we previously created. If the price is lower than the desired limit, we will keep the order on the ask price. Otherwise, we will send the order at market price, this is the bid price, to quickly cover the long positions. This is a simple example that shows you how to obtain data from different instruments, how to create rules combining this information, and how to operate on an asset taking into account other instruments. We encourage you to combine the possibilities offered by the use of multiple instruments in a strategy with other logic building capabilities you can learn about in our tutorials. Thank you very much for watching, and see you in the next video.